Everybody, welcome one and all. Hope you're having a fantastic day. Sorry, it's taking us a little bit of time to get going here. Nothing worse than trying to deal with live, right? All the little nuances. All right, let me open up that chat box. Give me a number one to make sure you all can hear me. Go ahead, drop that sucker in there. Aha, there we go. Very good. Very good. All right, Sean, that might be a little loud on that TV. Fantastic. I am soft. I've not been called soft before, Barry. I'm pretty freaking hard, actually. Hard ass. Is that any better, Barry? We made an adjustment here on our end. All right. Let's try to get everything set and going here, folks. Only a little bit. All right. Well, we'll see what we can do. We'll keep plugging away. So keep in mind as we get started here that everything we look at is for educational purposes. Nothing's meant to be advice or recommendations. Okay. We got a lot of stuff coming up, folks. We've got Patterns in a Flash Q&A coming up on the 8th. Trading You coming up on the 9th. Okay. There we go. That would be better if you could see it, right? So Patterns in a Flash coming up on the 8th. Trading You coming up on the 9th. And then everything is the week after. Mastermind Group, of course, is Tuesday night. Power Hour coming up this Monday, today. Next Monday, we will not have a Power Hour. We're going to try for Tuesday. When I say try, we don't get as much attendance on Tuesday, and I'm sure part of it is just habit. We really want to make this work. As long as we can get enough people to show up, we'll continue to do it that way. If not, then we'll just cancel it for that week going forward. All right, so just something to keep in mind. Crushing It with Volatility, brand spanking new. You can kill that volume all together, Sean. Brand spanking new, Crushing It with Volatility tonight. It's an amazing training that's going to get done. I'm going to introduce you in a little while to a brand new coach that's going to start working with us. His name is Sean. No, not that Sean. It's a different Sean. So give me a few minutes and we'll get into that, though. And then, of course, Trading Coaches Playbook is coming up this Friday as well. Ryan is teaching on Friday. Power option plays, covered call explorer, E-mini all on the regular schedule, except for next Monday, where it's a holiday. We do not teach. The office is closed. We shut everything down for market holidays. If you like what you see, make sure you follow along, folks. Not only to the various platforms, social media platforms we have out there, but tradinglikeaboss.com. You should be checking that every week. That's the easiest place for you to go ahead and register for Trading Coaches Playbook, for Power Hour, for Crushing It with Volatility, which one of the trainings, one of them is tonight. The first one is tonight. We've got 4 of them all together. But go ahead and make sure you check those out. Yeah, oh, good catch. Not next Monday, the Monday after. So, yep, 2 weeks. I appreciate that. Thanks, Henry, and everybody else. I appreciate it. It is 2 weeks from now. All right. Beautiful. All right, so that Trading Boss, the Trading Boss Manifesto, guys, we're making a lot of progress on what we're doing here. We've got the manifesto. That should be up on the website hopefully this week, along with our core values. We're going to get that up there as well. You'll find them at the bottom of the homepage in that footer down there. We're working on T-shirts and hats. I mean, we already had some hat designs we were sharing today in one of our meetings, and someone's like, oh, I like that. I got to order one of those. Send me the link for it. So we're going to have all of that stuff available. And again, anything that we do on hats and shirts, that's not what we do here. That's not our thing. All of that becomes contributions, whatever we make on that, the $2 a shirt or whatever it is, goes to the charities we support, like Wounded Warriors and St. Jude's and so forth, right? So just keep that in mind there. But, you know, you're looking for a place to belong, this is it, right? This is what we do as a company. This is what we strive for. This is what my team deals with every single day, making sure we're following along to the guidelines of who we are as a company towards you, that end user, that student. All right, Crushing It with Volatility. Like I said, we're going to bring Sean on in just a few minutes. He's going to talk a little bit about some of the trades maybe that he's been doing, a little bit what's going to be in his training tonight. Just he'll pull the curtain back a little bit. Still wants you to come to his training, right? Oh, I don't want to share that yet. Okay. What trades did you guys do? Drop those in now. Let me see the trades y'all did. Drop them in. Let's check that out. And in the meantime, I've only got one from today. That was it, which was Amazon. right? Monday, busy day for me. I'm happy that I get a trade off. I got a bunch of my covered positions off. That's not a problem, managing those, right? But we look at Amazon, and guys, my go-to are these 20. There's no reason for me to go hunting around for every stock in the universe and trying to find everything that moves. I do that in market mornings where I give you guys a handful of ones that I like the most every single day. But for what my core trading is directionally, day in and day out, these 20 stocks. I'm not trading market news directionally unless it is one of these 20, right? So Amazon today, look at the move, guys. Actually, let me go ahead and pop it up, pop it up, pop it up, up. So you can see where we closed. We just pierced down below the 103.60. We just got down below the 8 moving average. And what happened? We gapped down a little bit, not much, a little bit down. We stretched right back up to the 103.60, bumped our head on ugly where we had a confluence of the 8 and the fib line, and we failed, right? Great setup, great structure in there. If we look at it on an intraday chart, that's not the one I want. I guess we got two screens open on TradeStation. Let me grab it on this side. There we go. Zone. Ta-da. Right, and we had a fib line at 103.60. So let's go ahead and snap a line in there. Change it over to 103.60. Right, so we had the gap down. Come on, we had the gap down. We stretched back up. TradeStation not being nice. We stretched back up right here, and we failed, right? And that failure was the entry. You could see the move down. There's a couple different exits. You could have been out here. You could have been out on a second green candle up. You could have been out as across the 8, second candle above the 8. I would not have been out later than that. But overall, you're in at 103 and you're out at about 101. You got about a $2 move on the stock, 70 delta. It's about $1.50 on the option. It's not horrible, right? I mean, it's Amazon. It's not like it's a $3,000 stock anymore, right? It's $100-ish for that. So fantastic. SPY, Paula said up 9%. Great job. I love it. I love it. Let's see. John said Wheel of Fortune, Beyond, SPY, Naked Puts, GameStop, and Mara cash flow 1.2K. Boom! Chagalaga. All right. I love it. I love it. Let's see. Timothy said Tesla, $200 calls, in at 502, out at 650. Nice. That's $1.50, $1.48 profit on there. Very, very nice. That's awesome, everybody. Fantastic. Fantastic. Rick said, oh, okay. There we go. I see the last name. Hey, Timothy. Yeah, Rick said you guys are buds. So cool. Excellent. Excellent. Good job. Good job, everybody. Great, 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 great. Let's go take a look at Amelia's setup. You know, y'all know that Amelia is our head trader here, and she just did a directional trade today, right? You could see at 53, 26 seconds, she bought to open 3 SPY contracts, the 409s calls at $1.82, limit order, and then she sold them, what are we looking at, 10, 15 minutes later? She sold them at 220, which gave a really nice profit. What is that, 82, so that's 20, 40, 38 cents. 38 cents, so about $100 of profit there. She was 20% in 14 minutes. Don't look at the dollars. Don't look at the dollars. Look at the rate of return. That is going to be the most important component, is the rate of return. Right? Absolutely. You got to love it, guys. She crushes it regularly. Right? Amelia puts these out in her TradeWatch Alerts service. So, Lee, if you would go ahead and drop a link for that in there, I would appreciate it. You guys can go ahead and click on that. There's a 2-week trial. If you're interested, basically you get 3 setups every single day. So 2 weeks, you're looking at 30 candidates, right? Yeah, 15. Yeah, 30 candidates plus the other things that she puts out on SPY and Qs and so forth, right? Excellent, excellent, excellent. Well, all right, let's see where we're at here. Beautiful. So, Sean, I think I saw you in the room before. I don't have open my como se llama there
Yes. Hey, everyone. Can you hear me now?
in class.
Can you hear me?
So, Sean, you all set there?
Yes. Can you hear me?
Oh, I know what the problem is. You may be talking and I'm not hearing you.
Yeah, Sean, we hear you. Just Rob
Sean, you
doesn't
there?
yet.
What about now? Can you hear me now?
I can. So hopefully we don't have
Okay.
feedback here, guys. We got a second monitor on so I can hear Sean. Next time, I guess we should have put a headset on me. Would have worked. So sorry about all that. Hey, Sean, how you doing today?
Good. How are you?
I am fantastic.
So,
Absolutely fantastic. So some of you have heard me whisper about this, but Sean is a brand new coach that's going to start working with us here at Wealth Builders HQ. How many years have you been teaching now, Sean?
I'm not a spring chicken, that's for sure. I've been in the game for 25 years, actually.
5 years, so a quarter of a century. That sounds a lot longer that way, doesn't it?
More than half my life. I'm dating myself now.
There you go. That is fantastic. And what are the strategies that you like to trade most, Sean?
First and foremost, I just want to say, my hat's off. I'm excited to be part of the Wealth Builders team, first and foremost. So shameless plug. Happy to be a part of the team. And, as far as me, you evolve. I mean, I think that's a good word over the years. And so my last evolution was actually probably 15 years ago. I became an option trader, and dominantly I enjoy credit. And I kind of have a unique perspective, very similar to pit Chicago option pit traders, where they're going to be picky with their entry on premiums. So I guess in a nutshell, I enjoy credit trading, and I enjoy being very specific or sniper entry on my premium. I guess that's an easy way to say it. So I guess I'm a simplistic option trader if you consider spread simple, but then I'm going to be super precise on my entry, and that usually fixes a lot of the complaints that people have about selling options. So that's kind of my jam.
Fantastic. I love it. I absolutely love it. So do you have any examples of anything you've done recently?
Absolutely, I do. Can I share my screen real quick?
Uh, yeah, sure. Can you set that up, Lee? Make sure that Sean can share.
Or do you want me to just verbally talk about it? It's up to you.
Screen, I'd much rather do that.
Okay. So let's try it. Let's see what happens.
Guessing I have to stop share.
And let me know if you can see my screen.
Yep, you're there.
Okay, cool. So just for people know that we're working out to be able to use some other tools, but for now, this is Think software. And this is just a chart. This is a daily chart of ExxonMobil, but this might look unusual. This is actually dated basically last week on the 31st, basically. So I'm using a real-time playback feature with this software. I'm not plug in the software or anything. This is just to show you an example. And this was, last week in regards to interest rates announcements. And I had noticed that, this is ExxonMobil, and that it was getting a little bit toppy. So what I share with people, I mean, I'm kind of an old school technical analysis type guy. I combine trend and levels. So there was a nice resistance level, interest rates were risen, and I'm like, wow, this is coming up near resistance. So my thing, what I work with people on, is to be picky on your entries. So if it's an up day on a ticker, it's a great day to do a call credit spread if you're willing to short or be bearish on a particular ticker. I wasn't too worried, and I felt that oil was kind of overextended. I can share one more thing here. So we can see where it was basically prior to interest rate announcements, and we can see that there definitely was a hard pivot. It gapped up, and it gapped up and then pivoted on a dime and came back down pretty heavy. And so I take note of this. So there's a massive selling pressure, and to move the needle on something like ExxonMobil takes a pretty big bat, meaning probably institutional players, big banks, and things like that pushing price around. Okay, so let me show you one more quick thing. So what you're staring at, it looks kind of busy, and I totally get it. This is actually a virtual account. So this is a playback feature or a backtesting tool. Okay, and we're looking here where I set up a trade, and this was a 5 wide call credit spread. So it is essentially, let me change this to single real quick. I'll keep it pretty light and fluffy. Don't worry. I was selling the 118s and then buying the 123. So it was a 5 wide call credit spread on ExxonMobil. Okay. And you can see, where we're at, when we put on the trade at a little bit earlier, setting up on the day. So I did a faux trade, a pretend trade, not 15 minutes ago. And already I'm sitting negative on the deal, probably because this thing continued to go up since I put on the trade. And again, this is dating it back, a playback feature from the 31st. Okay, so I'm almost finished here. So let's take a look. And I'm sorry.
At this
What?
point?
What's that?
Sorry, are we supposed to be seeing your option chain, or are we still on your chart?
You should see, it should look like an option chain. You're not seeing that? Oh,
No, I'm seeing the chart.
why did it pause? Here, let me share it one more time. That was weird. Thank you. We're all in this together, right? So let's see. Let's try now. What do you see it now?
Yep, now I got an option chain.
Okay, sorry everybody. Sorry about that. So what you're staring at again is a playback feature. So this is an option chain, but it's playing it back as if it was 9:26 a.m. on January 31st. Okay, and before we jumped in the session just now, I did put on this faux trade as if it was January 31st, like 15 minutes ago, if that makes sense. So now it's since we've been chatting and I jumped in the session, it's been like 10 or 15 minutes and it's showing that we're in the hole a little bit. But again, this is a 5 wide credit spread. So this is the day before interest rate announcements. So what we can do is fast forward to the first or second to see how the trade fared. Okay, and so if I go back to the chart real quick, let me show you one more quick thing. So this was the chart that we were talking about, and I'm a big advocate of paying attention to your premium up versus down day and timing your entry into a premium. And this even works for debit as well. Okay, but on the topic at hand is on credit. And what I like to look for is trading price where price is less likely to go and being picky with your premium. So that's kind of a simple little ism on my style, my personality. Again, I like to set up credit trades where price won't go. That's usually a paradigm shift for people. And we'll talk about that tonight in our free training. Okay, and I'll put more detail into this. But here, you could sell the 118 call and then buy the 123s above it for insurance. Again, structuring trades outside of your support and resistance levels. Okay, so again, I'll put heavy weight on that this evening in our free training, but that's kind of where I structured my option strikes, if you will. And so one last little tidbit, we can see that I put the trade on, and since I put the trade on it, it's going against a little bit. This was a big position. I did 10 contracts, and you may not normally be swinging that much, but let's fast forward to the second and just watch what the trade did. And I'm going to hit go. Now, this was a situation where interest rates are announcing and it's pre-buffering right now. So it's pulling the data from the second, and we'll see what this thing does. And again, this was a trade out of the money, call credit spread. And you can see this is a fun little trade setup. Now, if you did one contract, you'd be up 66 bucks. Okay, if you did 10 contracts, you'd be up 660 bucks on this particular trade. And so for me, it's credit spreads, and it's an average hold of 3 to 5 days is kind of my goal. There are times where we get out same day if we get like a 50% crush in premium on the specific trade. So it's more hence the title. So it's timing vega or timing volatility. I'm sure you've read in books where people jump in where they're timing if it's a high implied volatility ticker, but then I'm the guy to show you how to be picky with your premium as well. Okay, that's probably enough of your time I took, Rob. Hopefully that makes sense, everyone. And I don't know if there's any quick questions, but that's all I have for you.
So people had asked, what does 5 wide mean?
So 5 wide would be the difference in strike. So if you sold the 118s and then bought the 123s, that would be a 5 wide call credit spread.
Yeah, so everybody's gonna have to learn a new version of Brooklynese from Sean, based on how he trades and the terminology that he uses, right? Yeah, it's pretty simple, guys. There's not much difference here. Sean's trading a standard strategy, which is a credit spread, right? He's doing bull put and bear call spreads. The difference is he's focusing very heavily on Vega. Vega starts with V. V stands for volatility. He's focusing very heavily on Vega to help him make his decisions for getting the right premium and the right position for that. So, Sean, I appreciate you jumping in here. If anybody's got any questions here, let's see.
Yeah, I'm the other Sean. I'm SEAN. So that's easy to delineate us, I guess. SEAN.
Yeah, we had some fun today talking about how we're going to distinguish between the two of you.
And yeah, people were discussing that. I enjoy on bicycles, and so they were kind of discussing, giving me a nickname. We'll see if the nickname sticks, though.
All right. Well, Sean, I appreciate you jumping in for us. Thank you very much.
Okay.
Guys, check out Lee. Drop in the link if you would, please, for tonight's question and volatility class. Now, there's 4 of them, folks. This is the link. You can pick which one you want to go to, but the very first one is this evening. You definitely want to watch what Sean does in his style. He has an amazing backlog of results of what he's been able to accomplish with this. So you definitely got to check it out. Vegas, Sean. There you go, Roman. Excellent, Sean. There you go. Please drop that link in, guys, so you are all set. All right. With that, here's what I want to do. Good. Brenda said I signed up for tonight, and I think the rest of them too. Okay, Brenda. You can only sign up one at a time, so you had to do it 4 times if you did that, and that's okay. They're all going to be the same class, but you'll get a good perspective of what he looks for in the trade setups that he does. The nice thing is, it is not where I am trying to day trade. I am in and out today. For some of you, it doesn't fit your style. You look for something a little bit longer. This is an opportunity maybe to learn a strategy where you're not in and out and that quick rush of get me now, get me now, get me now. You've got a little bit more time to work it and play with it in there, right? Okay, fantastic. So let's go over and take a look at the S&P 500. All right, so let me take the symbol grid down here. All right. Let's go look. Let's go look. Let's go look. Let's go look. All right, bigger picture. Overall bearish pattern, right? Oh, that works. Thank you. Share my screen. Excellent. All right. So bigger picture, overall bearish pattern, right? We're moving down. Then we get this little bit of a bounce taking place right here where we broke out and we failed. We popped out again on a here kitty kitty, double top, and we failed, okay? We got this nice breakout to the downside, and I'm hearing all kinds of, and that's what we're going to talk about the bear in just a little while. I'm hearing all kinds of comments from people and from traders of why did we not buy back here? Why were you not telling us back here in October that we should be buying on that bounce in there? And, let's be realistic. Could somebody have guessed that that was the point? Yes. Was there a technical reason to say that lower low was the place to buy? No, there was not. We got a bounce in there and we vacillated for a little bit, right? We moved up, we came back down. We had a good pop. We pulled back and right here on the 10th of November, we got a crossover of the 8 crossing up through the 21, through the 55. We didn't get the 21 to cross over until the 15th. Right at that point, now we're in a bearish bias on the S&P 500 in a short-term bullish move. Did I say bearish bias? We were in a bullish bias, short-term bullish move in a longer-term bearish pattern is what we've had in there. We got that quick breakout, and we got this this quick breakout over here. We pulled back and we bounced right on this recent one. Now we're in true bullish bias here. That crossover set us back up because those when it broke out here were saying, oh, why didn't you tell us to buy here? I didn't get any emails from people saying, oh yeah, you see it did fail, right? None of that, but I promise you, if you were a buyer on one of these days, you got your head handed to you by the time you got taken out of the trade, right? You got this move up, the retest and the bounce. We've had mostly bullish candles setting up in there. All right, now breathe, right? We've got this black line up here, which is the 4181, 4,181. Write that number down. You will see, you can see the level right there. 4181 level, fib level. That is a Fibonacci number. If you go ahead and you take a Fibonacci number series and you start with, let's say the number 3, right? One of the earlier fib numbers, 3, 5, 8, 13, 21, 34, 55. You keep going through. 4181 is 4181 is a Fibonacci level. All right. So that's a major fib level. Well, what happened? We have run up, and on Thursday of last week, we ran right into it and closed there. We popped our head above the trees just to check out the air and said, yeah, it's cool. Come back down. Friday, we gapped down. We ran back up to the 4181. So the bulls attempted a breakout. They could not get above the 4181 and they failed. We had a long tail or long wicked doji on that day, on Friday, but the bears were definitely in control. Today, we gapped down yet again. We are still in bullish bias, right? We're still in a bullish bias, but we've had a pullback now from that 4181, a little bit higher than that, but we'll go with that number right now. And we got down to about 4,100, we'll call it. So about 80 or 90 point move to the downside is what we saw take place on this setup. Okay. Sean, they're still saying my volume might be a little low on this setup here. So right now there are bulls out there that are saying, oh, man, we got to rock. We got to run. We're going to take off. It's going to go. Listen, can it go up from here? It can. But ask yourself one thing and one thing only. What technical reason is there? What compelling reason is there for the market to go up? Thank you, Brenda, on the sound. What compelling reason is there for the market to go up right now? Right? Is it interest rates? Well, maybe, but Powell said that we're not done going up. Is it him focused on the market? He said it's not a concern of his, is what the market is doing, right? Is it the war in Ukraine and Russia ending? Well, I don't know. I didn't hear that story. Is it the new issue of shooting a balloon down from China that now may cause issues trade-wise, war, retaliation, whatever it is with China? I mean, we've already proven as a country that we're weak as dirt. There are so many countries that are just, I believe, waiting for a reason to come and attack, right? And I don't think we're strong enough as a nation, as leadership, to do anything about it, right? We'll fight back, but we're not feared as we used to be any longer at this point. Right. So what compelling reason says it's time to go up? Is it we've had some good earnings, but look at the layoffs we've had. Look at the major companies out there that are having layoffs. You can't rely on companies like ExxonMobil to go, oh, record profits in there. Yes, some of those were purchases that they made and other things that brought those profits in. It's not just oil, right? That's not some of what the news stations are reporting on. CEO was adamant about that when he was on CNBC, that it's not just money from oil, it's other purchases that we have made along the way that have been a big part of those numbers for us. Okay. So as we look at what's going on and watching this here, you need to sit back, position number one in the chair all the time as you're trying to analyze this. You should not be up on your keyboard, position number 3, ready to place a trade until you have a good belief system in what you see happening and talking it out. And I will say it may sound silly, but you want to talk it out loud. You want to verbalize it out loud, because when you do so, you are speaking it. So that's your first sense that you're using. You're seeing it, right? You're seeing it, sense number 1. You're speaking it, that's sense number 2. You're hearing it, that's your third sense. And if you're half Italian like I am, or 68% according to 23andMe, then my fourth sense is my hands, because I talk with my hands, right? You guys see it all the time. I can't stand doing videos. I do it market mornings. I try to keep my hands on the desk and don't move them. And I can't do it. It's kind of like I'm stifled when I can't do that. Right? Sit on my hands. Like I can't talk. Right. So you've got to look at this and say, what is the compelling reason as to why? On the S&P 500 right now, we're in a bullish bias in an overall longer term bearish market. That 4181 is the next key level that we have to break above. If we can violate on a close that 4181 and start to bounce, then we start looking backwards at other key levels as resistance, other places it's made it to. This 4325 right here, that will be the next place we're looking for if we can close above, retest, and bounce the 4181. Gives us a little bit of room to the upside. Now, there are other fib lines in there, but not as important as that recent swing high we had there. If we violate there, we'll go back and look for the next, right? And we will continue to do so as the market moves. Those are our resistance levels. We want to know where the concerns are in the overall marketplace. All right, so let me see what you guys have. A couple of questions came through here. All right. So Trip said job numbers up, but so are layoffs. Exactly. And here's what I'm hearing. Oh yeah, but that's just the big companies. Oh, you mean we need to worry about the mom and pop that laid 2 people off last week? Or should we worry about Microsoft laying 7% of its staff off? Or Amazon laying off the entire division? Or Amazon now shutting down, stopping in progress Amazon Fresh stores, closing some down and halting any new Amazon Fresh stores from opening, right? They said it was cheaper. You ready for this? It was cheaper to take the stores that were started and leave them sit than it was to actually go through and open them up. And I'm sure it's the camera equipment because they've got 82 million cameras inside of that place. Everywhere that you go, and we have one it's in Oceanside, New York, right? There's one here. I like it. It's fast. You're in, you're out. You're not, right? You pick something up off the shelf, put it in your cart, it knows you took it, right? Well, I did. I helped a woman. I think she was sneaky and knew this was going to happen, but older woman, she couldn't reach on a very top shelf. So I went over and I got her 2 packages of Jello or pudding or something like that. I get home and I check my receipt and they charged me for it because it was my face attached to it. Now they gave me the monies back for it, but they have cameras on everything there. I'm wondering if you're getting like radiation poisoning with all the cameras they've got there. But you look at these major companies out there that are cutting back in jobs. That's the first step. The mom and pops are going to see it still. Yes, there's still good number of jobs available for people. Not a question, not a doubt, right? But even with that, folks, what's happening? People that are saying, no, I don't work in an office anymore. I work from home are going, you know what? Maybe I'm going to come back to the office a couple of days a week now. Why? Because there's that fear of that layoff coming in now, right? Because people are going to get laid off. All right. So I agree with you there, Trip. Brenda said we are weak because instead of uniting together, we're too busy attacking each other. Yeah, that's a good point, Brenda. There you go, Stephanie. Good idea. Sean said, many a time I have accidentally doubled my position instead of submitting a close order because I didn't speak it out loud. Yeah, I've done it before, Sean. That one of my biggest losses was from that. Let's see. Darlo, how you doing, my friend? Will China attack Taiwan out of spite for us shooting at the balloon? I don't know. I mean, everything's on the table right now, and that's the problem. And Darla, that goes back to my point. We just don't know. So to tell me that because we are above the moving averages and it's a bullish bias that we should be taking long directional bullish entries, maybe. Oh, but the NASDAQ's had an amazing quarter, an amazing month that haven't seen 4 weeks like this since how many years ago? I get all that. But look at the beating down we took as well going through there. You know, there's a lot of confusion. And listen, I'm by no means an expert in real estate. I own my fair share, have owned my fair share, sold a bunch, bought more, right? Rentals, everything, okay? We fixed it. We've gotten rid of them, all of that. Well, so again, I'm not an expert, but to believe that the interest rates, you know, let's say that the next quarter point rate that they have is where they're going to stop. I don't believe so, but let's say that's where they stop. Okay, at that point they stop. People looking at it going, oh, things are going to get better. No. They're not dropping the rates anytime soon. We don't have the economic consistency that we need to bring our rates down right now. We're not there today, in my humble opinion. We're not there today, right? I think there's a lot more to take place. I was talking with the realtor that we're working with in Florida right now, and she's trying to tell me, well, I don't think the houses are going to drop that much. And we're going back and forth for a little while. And she goes, okay, well, I think, you know, maybe third quarter this year, you might see maybe 10 or 20% more, 20% on the high side. And I'm like, well, wait a second, 10% on a $500,000 home is 50 grand. 20% is $100,000. That, I mean, you're not talking about not a lot of money. That's more than most people have in a bank. $100,000. And what does that cut off of your mortgage if you have $100,000 less that you have to mortgage, or $50,000 or $25,000 if it's only 5%? I still think that there's some to come down. And through the conversation, she goes, well, you know, and the thing you've really got to be concerned with is in Florida, you know, it's not just the interest rates and the housing prices being off, but, you know, insurance has become very, very hard to obtain in Florida. So I believe that on top of everything else, you're going to start seeing foreclosures take place in Q1 of next year. So, okay, so wait a second. Where is it telling me then that today is the best time to buy? It's my best prices now. I don't see it, right? So I think real estate, housing, look how many places around the country have suffered already. Arizona, Tennessee. I mean, just massive crush in price. New York's high-end prices have held well, right? But you're not getting a lot of people buying $5 million homes at this point. Jim said SPX closed above the negative 618, getting time to redraw the fibs. Would you draw the so yeah, we got above it, but if I were going to do it, Jim, I'd probably draw off of this swing low down here up to the swing high and incorporate that middle one in there, right, as the hiccup. I'm not ready to do anything yet. I'll analyze it in pop, but that's where I'd be looking at. You could look at this here, but I think it's just going to be too small of a move. I think that's going to come out less than the daily movement on the SPX. So just something to keep in mind. All right. So, and that was, the topic from today. When you look, beating back the bear, right? And this came up. We always put this topic in place. We waited until the Fed announced last week, because we plan out some emails to you guys, what we're going to talk about and so forth, that we're going to send out in advance. And we knew what had happened with the Fed. We knew the market had headed up, right? On the announcement, they were just defying what Powell had said. Wow, I was thinking Greenspan. I don't know why. Defying what Powell had said. Man, the market's going to take off from this point. It's going to go up. It's crazy. It's, yes, okay. So it defied it. But, man, I just think you got some stunada out there, some crazy people that are trying to push a direction or an opinion or a movement or so forth. But I just don't see it for myself. Could I be wrong? Absolutely. Would I be happy to say I was wrong? Yes. I can tell you the last three major movements that happened, I had called them, all three of them. Not by date. I've never picked a date. I'm not that good. I'm not a Swami, right? I got follow Rob's rules, right? We've got that on here somewhere, don't we? We do. All right, there you go. Follow Rob's rules, okay? So, yeah, there you go, Brenda, exactly. You got it, Jim. Yeah, we're still waiting on it. That's just it. We're still waiting on it. We'll see what happens over this weekend, where it goes. This recently happened, barely above the 618, not rushed to get in there and make a change to it. So I'm okay with that. Okay. All right. What candidates do you want me to take a look at? Drop them in, folks. What candidates are you focused on or want me to focus on? Drop those puppies in place, and we will do just that. We've got a little bit of time left. Let's see. Jim said, I added the 233 moving average. Simple. Should be, right, Jim? I don't see E, so I'm guessing yes. But on the daily charts, SPY bounced off the 233. Apple bouncing off the 233 today. Google last week failed down off 233. Microsoft last Friday closed at the 233 and falling today, 233 fib. I like. Yeah. So listen, I'm a big fan of it. I probably should have it on more when I show it. I look at it all the time. I just don't keep it on there just because it not stretches but scrunches the chart down. And for showing it on the screen, it makes it a little bit harder because the entire chart moves down because the 233 has to be on there, on the screen, visible on the screen. So, but I agree, Jim. I think it's a great candidate to have up there without a doubt. All right, so let's see what we've got here. Brenda's asking for SPY and Qs. So I'm going to go ahead, bring my symbol grid back in. I'm going to go and grab all symbols, right? And then let's go look at SPY. Very similar pattern to what we're seeing on the SPX, okay? Quick pop above the negative 618, a fail, a bounce off of the 8 moving average right now. Still down about 2 points on the day. Brenda, if after lunch, after 1:30 today, Eastern time, right? If you could see a bounce off of the 8 to the upside, I'd only take it to the upside. And you think the market's going to push a little bit, that could be a potential entry for day trade. Downside would be hard. I would like to see, if you're looking at bearish, I'd like to see it close down below the 382 level, the negative 382, fail, retest, and drop, and then the 236 becomes our next target, which has a confluence of the 21 moving average there. So I like that setup a lot. Qs is our next one that Brenda asked about. All right, so there's the Qs. little bit different pattern than we had on SPY. We got above the 618, not negative 618, and a pullback. Yeah, we don't need a new fib at this point. So same thing, Brenda. I'd like to see them move back to $301, close near it, and a bounce. If I can get the bounce off that 301, get me up to 301 and three quarter, 301 and a half, maybe 302, somewhere around there, and take that bullish entry with 308.70 as the next resistance. So I'd probably be at about 306 and three quarter, 307. 307, somewhere around there would be my exit to the upside on Qs. All right, I hope that helps. Let me know in the comments down below. Let's see. Rick is asking for Cisco and TMUS. Cisco. All right, so let's bring this back a little bit. All right, so the fib has been violated at this point on Cisco. So let's pull that back. Let's draw a new fib. We're gonna come off of this swing low, and you can see we had a quick pullback here and then sideways move. We got this move up, and that right there gave us a decent pullback off of that top down to here, right? But not great, but a decent one. Right? Great would be it hit the 236, but we're close enough, okay? This next one, we're right in the same ballpark in that same range. All right, Rick, so with that being said now, 47.72, so we'll call that 48, up to 50 and a half, $2.50. We've got Cisco at 178. So we need to split this. We're going to put a negative 136 and a 118 on our Fibbits. All right, so let's click OK. By the way, if you want to know more on how we do what we do with Fibs, guys and gals, right? Guys is very much a, como se llama? Very much a generic term to me. So, I didn't want to close that down. Let me come over here, open that up. So what I was trying to say, or starting to say, is go over to tradinglikeaboss.com, right? And there's the class, the link to sign up for Sean right there. And you've got this Fibonacci today's power indicator. Go ahead and it's a 3-part series. We send you 3 days in a row. And that will help you to get a good understanding of how we do what we do on Fibs. All right. So with that, Rick, right now we're down. When do they have earnings coming up? It's got to be soon. Their last earnings were 11/16, 12/12. So their earnings should be sometime in February. I'm not showing it on our mega charts just yet. So keep your eyes open. If anybody knows the earnings date, you could drop it in. That would be great. Rick, we're in the middle of nowhere right there with moving averages, fib line. I'd be very cautious, but if I could get the break of the 47 3/4, so break, retest, fail, take the bearish entry, and you've got a target down to 46. The only problem is it's only got a target of $1.50 down, $1.75 down below where it would be from that fib line. So a little bit tight on my end. All right, let me just see if Cisco 215 earnings. Yes, that's coming up quick. All right, I appreciate that. That was Rick and Timothy. Timothy said after the market. Okay, good. All right, so I got to scroll back up through all these comments, get back up to where Rick was there. Let's go look at TMUS. All right, so I have been a Sprint customer for like 30 years right now. T-Mobile bought Sprint, and I am not a happy camper with T-Mobile at all. So sorry, Rick. I know you like them, but man, they have messed us up way too much. So right now, this big gap down. I don't know what caused it. What the news was today on it for the gap. It wasn't earnings because that's already happened a couple of days ago. So, but where we are right now, Rick, if we can get a close here, retest of the 143 and a fail, you got room down to about 140 and a quarter on the downside. All right, so I hope that helps. Darlo said, I'm using old fibs from 2.9 to 224 of 22, and it's still looking like there's a lot of hits. Am I wrong for thinking that way? It's not a matter of wrong, Darlo. One of the things that I introduced with fibs, and I've done this in some of the trainings we've done, we did a Trader Super Summit in New York for our Inner Circle and Mastermind members. And inside of there, I talked about a new reason to redraw the fibs. And that was when you get a fib that starts getting 8 or 10 months old, it starts to lose, what's the word? Elasticity, right? It's not as important of a level any longer as it was. That doesn't mean we won't hit, because remember something. If I do have a new fib, the old one stays there. And we always look to see if there's any kind of confluence on those lines, and is it bouncing or failing from those levels. So that's the biggest reason for it, Darla. It's not that they won't work. We always try to get something that's a little bit more relevant, current, when possible. And the time frame, 8 to 10 months. All right. Good. All right. Karen's asking for Tesla and SPY, which we already covered. SPY, Tesla. All right. So, right. So they're up about $5 right now on the day. I have a doctor's appointment tomorrow, and we will spend almost an hour in the doctor's office. I will be there tomorrow for what will be a 5-minute test. 5 minutes with my doctor talking about me, and 50 minutes talking about Tesla. That's what the conversation is. He knows what I do, and he lets me know I bought it here, I bought it there, I added this, I added that, we got this dividend, we got that. It goes back and forth for almost the entire hour on Tesla. I like Tesla a lot. I own it outright. So something to keep in mind. 200 is our resistance level, but we're in the middle of nowhere, Karen. So I'm not ready to do anything personally. 180, 200. We don't need a fib in there. We're okay. So I'm good at that level where it is right now. Right? So Karen, I hope that helped. I would wait for the pullback, Karen. Back to that 180.68, which means 181, 181 and a quarter, maybe half, and bounce, and then look for the entry there. Hope that helps. Let me know. Trip is asking for AMD, IBM, and Micron. All right, so AMD. So Okay, fibs are all good. Nothing wrong with the fibs. You go back to June, so we're fine. So right now, let me just pull it out a little bit though, get it out of my way. Right now, Trip, it was a great move today as a retest and a fail off the 86 with the bearish market and any bearish news that drove them that way. But you're looking at 81 as the downside. I would rather, caution on the downside. It would be only for the day if you played it. I'd rather get the bounce off of the 8 fib line confluence and take the bullish entry there for the way that this is setting up. That's on AMD. For itty bitty machine, IBM's getting tough again. It had that nice move down from earnings, and then it just died. You got nothing in there at all. It's just like, boop, oop, boop. Is this thing working here? It's just that kind of nothing going on there, Trip. So I'd be cautious. Get me closing like it did yesterday, right? Into Friday. That gap down today to stretch up, and the fail was an opportunity. But you're looking at the full length of, width of the two fib lines are $3. So the tightness may be a little much, but you may be able to pick up 60 cents, $1, $1.50 on that setup. Right, and then Micron. Now let's go back and look at the whole fib. All right, so we're in a bullish neutral bias right now. That gap down has made it tough. I can't do anything. In an ideal world, we want to see this back above 62. If it does fail, it's got to fail to 58.75, retest and drop. And there's the bearish entry down to 56. If it breaks out to the 60, above the 62, retest and fail, 64.5 is our next target. All right, so I hope that helps, Trip. Brenda, you're welcome. Hey, Raj, sure, you want to look at VET, V-E-T. So $14 stock that is in just a tailspin from what it looks like, Raj, right? So we were up at $30. We're now at 40. Granted, we were much lower than that. We were a $2 stock in 2020, right? Who are they? Energy, oil and gas exploration. So their exploration has not done well. I can tell by the pattern, right? At all. So caution on something like that. I don't see any compelling reason to buy it. I'd be looking at credit spreads and or directional trades. You're just not going to get a lot of credit on a $15 stock, whether it is Taking a directional trade, this moves $1.40. It moves about 70 cents a day, Raj. So you don't have big movements there on an intraday basis. There's a little bit of caution there. Amgen, on the other hand, does have a little bit more movement than Vet does, right? They move 5.5, almost $6 a day, right? Overall pattern is bearish on Amgen. Whoopsie daisy. Let's try that again. Okay. So what do I need to see happen? So Raj, break down below the 242.87, preferably today on a close. Retest the 242.87 tomorrow and drop, and there's the potential entry to the downside there. Can you take the bounce off of that same 242 and jingle? Yes, you can. You've got a clear path up to that resistance, but I need a bullish market to be driving that before I would consider taking this against the market condition. All right. I hope that helps. Let me know, Raj. Jim said Q's, the 233 SMA is now at 299.14. You said 301 to bounce off of two support levels. Absolutely. So if we look, so what Jim said was the 233, do I have it on this chart here? Let me see. Because I am in the office right now. I'm not at home. There we go. See how the chart kind of scrunched down there on us? $233 is now at $299. So we already had a confluence, Jim, right? We had the $300 and $300.76. There's a blue zone should be drawn inside of there. On top of that, we put the 233 at $299, right? So Jim said you said 301 to bounce off two support levels. So 301 would be the bounce to the upside. The 299 would now make it a third level. So you have three pieces to give us a nice strong confluence inside of that area there, Jim. So good catch on that, with that in there. But watch, if I remove this line, where is it over here? So watch what happens. See how the chart is scrunched a little bit? Let me actually back it out a little bit more, right? You see how the chart is kind of scrunched down? If I get rid of this, look where this height is, right? If I get rid of this, see how it kind of opened up? That's why I don't keep it on for teaching. I wish I could. Let's see, Trip said, y'all let's see much there. February 15th conference call in Cisco. Okay, good. Appreciate that, Trip. John's asking for Beyond Meat. BYND. They were doing so good at one point, weren't they? I mean, you go back and look at these guys. Woo! $250. A little shy of that, 240-ish. And now they're at 1778. All right, the fib itself is still good, I think. So here, let's see. Here's one of the ways or reasons for Darlo that we look at for fibs of do we need to redraw, right? So that is $33, let's call it right there. Right now we're going to grab another dollar difference tool. We're going to come from this swing high. That's $33. So they're the same dollar amount. So which one should we use? Should we use the older one, give me an O, or should we use the newer one, give me an N? What do you guys think? Good. Everybody seems to be on the same page there. We need to use the N, the newest one. So I'm going to delete and get rid of those two dollar difference tools. I'm going to pull this back. Never, ever, ever delete your old fibs. And always keep them intact if at all possible. Meaning I want it to go from the start and the finish point. I want it to stay on the chart. Right. Largest directional move closest to the right side of the chart. Jim, you got it. Spot on, my friend. Spot on. All right. So we got a nice little bounce. Yeah, dead meat, Rick said. We got a nice little bounce came off of it over the last couple of days. 1190. Yeah, we're gonna have to split that. So 12 to 19 is 7, 8. Oh yeah, we need to split that. So let's go ahead and add a 118 and a negative 136. Okay. If I can get the bounce and the move back above 1961, so get me up to about 20, retest and bounce. That's an entry up to about 24. We actually probably have to split that level in half as well. All right. So it's a decent sized move in there. Let me just make sure I didn't miss anything. So Jim said when to withdraw fibs on your 522 power hour. You explained this in detail. Appreciate that. So guys, go back to Jim. I love that you got it documented. Go back to the May 22nd, May 2nd, 2022 power hour. This training, you'll find it on YouTube. And Jim said in there, I went through and explained how you're welcome there, Rick. See if I missed anything. I think I got all of them at this point. School's out. Yeah, that was the bell. School's out. Exactly. So the bell sound is like the 1 p.m. bell. Exactly. You know, it's the Mrs. Crabtree. Students. So Lee, drop in a link to Sean's class tonight, if you would. Crushing with Volatility. Folks, do not leave here until you register for that free training, whether it's tonight or one of the upcoming ones. Don't say I'll do it later, because you won't. You won't. You'll forget. Right? At least this way you'll get some notification emails or remind you of that. But Lee dropped it in there, so go ahead and check that out. With that, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it, and remember, you just one trade away. Take care, everybody. I will see all of you at our next update. All right, bye for now.